Good evening, ladies and gentlemen. I'm Hassan Miragala, Manager, Corporate Finance and Strategy. On behalf of my team, I would like to welcome all of you to Sunshine Holdings' second quarter results webinar for FY25. So to start things off, few housekeeping announcements. As usual, this webinar will be recorded, then later uploaded to our IR website and the CSE website along with this presentation. You can use the following link to access this presentation as well as the recording. So during this webinar, all participants will be muted. And during the Q&A session, you can use the raise hand option and I'll unmute participants accordingly and you can ask your questions. As well as you can type in your questions through the chat box itself. So similar to previous quarters, the presentation will start off with group highlights for the quarter. Then we'll deep dive into each of the sub-business segments, where our business heads will take you through each of these segments and explain the business performance for the quarter, as well as give you an outlook for the future as well. And then we'll end the session with the Q&A portion. So let me first introduce our team. So we have Mr. Shyam Sathasiva, Group CEO, Sunshine Holdings, Mr. Ananditya Kumar, Group CFO, Sunshine Holdings, Mr. Hiram Samarasinghe, Chief Growth Officer, Sunshine Holdings PLC. And then from the respective businesses, we have Mr. Shanta Bandari, who is the CEO of Sunshine Pharmaceutical, as well as HealthGuard Infinity. And then we have Mr. Farman Nizar, who's COO of HealthGuard Pharmacies. And then from the consumer side, we have Mr. Amrutha Luvihari, who's the CEO of Consumer Local Brands. And then lastly, Mr. Sanjeev Sarnapal, who is the CEO of Sunshine Tea, the export arm of Sunshine Holdings. So before we start things off, I would like to cover some corporate announcements during the quarter. So earlier October, we successfully completed the equity infusion of KR 3.2 billion investment into our Sunshine Healthcare arm. So following this investment, now Sunshine Holdings holds 85% of shareholding in our healthcare sector, where the balance is held by IFC. So as we mentioned in the previous instances, majority of this investment will go into scaling up our local pharma manufacturing businesses, as well as we'll be looking at investments in diagnostics, as well as expanding our retail and distribution presence in the market as well. In terms of dividend announcements, Butterworth Plantation, a few days back, we announced, actually declared a first interim dividend of 8 rupees per share. And from a Sunshine Holdings point of view, we declared a dividend of 1.5 rupees per share, which will be the payment dates would be in 10 and 11 December 2024. So with that, I would like to hand over to Mr. Shyam Sathasiva to take you through the group highlights for the quarter.
Thank you, Santa. Good evening, ladies and gentlemen. Thank you for being here for Sunshine Holdings' second quarter earnings webinar. As you can see, we've had a reasonably good quarter top line growth of 7% to 15.8 billion. For the quarter, driven by our double-digit growth in healthcare, nearly 14%. Healthcare, of course, is more than 50% of Sunshine Holdings' business. We've had some flat numbers in consumer, which is our second largest sector of the group, and a mild dip in agri, which is Butterworth Plantations, both the dairy and the oil palm business. And Hiran will go into more details when we cover that sector. Overall, our return on equity has been at 23.5%, continues to maintain at high levels. Debt is low, and we continue to push for better earnings. We've had some challenges overall in our year-on-year earnings. I will go into some of those details next. If you look at our detailed highlights for the quarter, while we had top-line growth, we had challenges in EBIT and PAT. EBIT impact primarily has come from our consumer business and agri business, while we've had positive numbers in healthcare. And our PAT impact has come driven by higher taxation in our agri sector, which faces now the full 30% tax was last year, where we were at 15% or so and less for the agri production. The challenges we will see will be more in terms of consumer pricing and ability to improve margins there, versus we've had opportunity in the pharmaceutical business and in manufacturing to have reasonably good margin expansion there. If you look at the waterfall in terms of revenue and EBIT, revenue growth has come from, like I said, double-digit growth in healthcare, which has also had positive EBIT growth. Our impact has come in our consumer brands and our agri business, especially consumer, where pricing was a challenge. And under the CEO will go into some of these details. The mix has broadly stayed the same. And what we're looking for is both volume growth and margin expansion across our businesses. Let me hand over to Shanta Mandara, who will take you through most of the healthcare sector. Over to you, Shanta.
Thank you, Shyam. Good evening, ladies and gents. Yes, so as Group CEO mentioned, the healthcare sector had a very good Q2. In the first half of this financial year, the Q2 results was, as mentioned, the revenue grew by 13.9% compared to the last year quarter. And you see that the EBIT growth was mainly contributed by this revenue growth, where the pharma business and the manufacturing business really was driving the sector revenues and profits. The margin mix was positive for us in the Q2. Hence, you see the 18.5% EBIT margin being reported for the quarter. Moving on to the respective businesses, the pharma agency business was a main driver for the healthcare sector for the Q2, whereas the revenues grew by 17.5%, and most importantly, the business was able to have a positive volume growth of 8.1%, where when we look at market information, the entire industry, the volumes were degrowing by 1.8%, although value reported was 3.1%, which you see on the slide. However, the volumes of the entire industry has not yet started growing, and the business have grown by 8.1%, which is very positive and quite futuristic for us coming from the previous few quarters. The Q2 has really placed us in a positive growth trajectory. Moving from the healthcare agency business to the distribution business, again, mainly supported by the pharma agency business and some of the other customers that the business manages distribution for. Overall, again, quite positive for the business, that is the pharmaceutical distribution business. We call it HealthGuard Infinity, which is again a 17.2% revenue growth reported for the quarter, and the volumes grew by 21%. So we are operating through 6 distribution centers, and we are expanding our distribution, our own distribution in the north. So we will be opening by December end the north distribution center as well. So overall, the distribution business is doing very good in terms of their operations and trying to sign up new agreements with new clients. Moving on from the distribution business to the medical devices business, again, have done well, but you see that compared to the previous year, where they had a one-off tender, hence the business has a contraction of 31.2%. However, when you adjust the tender one-off sale that we did last year, still the base business is growing by 10.8%. So it is very positive again for medical devices, where the revenues are growing and stable in terms of revenues and also in terms of margins. Moving on from medical devices, the manufacturing business is the other important arm of the healthcare sector. Again, doing well in terms of growth compared to the previous year, same quarter. It has done extremely well by 118% growth, which is mainly stemming from the capacity increases. The capacity utilization has been over 75% in the quarter. Hence, the business have reported very positive growth in terms of MDIs, the metered dose inhalers. So therefore, again, that business, we see that we continue to increase capacity and service the government buyback agreements. With that, let me hand over to my colleague Farman to take you through the retail business. Farman, over to you. You're on mute, Farman.
Sorry. So good evening, everybody. So what you're looking at now is the basic financial performance with some of the operational metrics for HealthGuard. So at an overall level, what I would like to say is that HealthGuard continues to perform from Q1 to Q2. We've grown at 10% at a total store level. And even with 2 young stores, we've done pretty well. Maybe later on, I can talk a little more in detail about how the new stores are doing. Many initiatives were done for the Q2, specifically engagement with the frontline staff to bring alignment and morale, uplifting to drive the numbers has helped in Q2. As an outlook for Q3, we see it as a positive outlook because the latest Peppercube data, which gives us about consumer sentiment, throws some good light. Perceptually, consumers are still struggling to show a positive this thing, but you're seeing good numbers about the future. So for Q3, we hope to move well in the new store performance. We also are hoping to enrich the joint business initiatives with our suppliers. Further, in terms of new revenue streams like home service for pharmaceutical deliveries, those are something that are on the card. All of that is giving us confidence that Q3 will actually look good and continue on the 10% growth. Yeah, I think so. That's what I like to say for retail. So I would like to now give it over to my colleague, for the next section. Yeah. Lasant, you can pass it to consumer.
Thanks, Farman, and good evening, everyone. So giving the highlights of consumer sector. So as you can see, it's 1.1% modest growth against last year same period. So this is actually there was year before last, the branded tea start declining 12%, and that decline, the good part is that decline has reduced to 1% as of now. The branded tea decline, branded tea is growing now. On that, in the second half, we have made a significant improvement in terms. The second quarter, we have made a significant improvement in growth versus first quarter. Tea prices are also now favorable. It was last year very good prices that was given us more margin and EBIT from the prices. But this year, the prices are considerably high up to now, and that also impacted towards heavily on the growth of margin. Moving on to tea business. As I said earlier, the tea, we had some internal structure changes and investment limitation based on the, because we accommodated the VAT impact without passing on to consumer early this year. VAT was imposed in tea from 0 to 18%. And we accommodated that without passing into consumer, and that limited us in getting more margin in this year, early the first quarter and second quarter. Then a small dip in April and May from Run Carter brand is seen. But however, the good news is that second quarter, except for Zesta, both Run Carter and Waterwell is up on the growth trajectory and maintaining the share month on month. I can show it in the next slides. So you can, as you can see, the share, whatever the SEL consumer brands, the shares was declining up until January, February this year. And then that was mainly coming from the pricing. Then from first quarter, if you take up to September, if you take, we are back in 48% market share overall. And this market share is without modern trade and without SMMT and wholesale. So that indicates that we are, our overall market share with all that channels is over 50% mature. And this we are gaining mainly from Lipton infusion and Maliban is also, as you can see, they were introducing heavy trade schemes, electricity bill payment and so on early better part of last year. And now that also is declining and we are on a very strong market share trajectory. Overall, other players are local small brand also gaining market share. That is mainly because of the value for money segment. So moving on to confectionery, we have a bit of a struggle there in confectionery. However, you can see the second quarter, we have a growth. A good growth in second quarter versus previous quarter. We are not into premium category. We are into value for money category. So if you take value for money, you can move on. Yes. So here you can see in the value for money category, which is Darlie Butlers and consumer Sunshine Consumer, we are still the market leader in the value for money category. Perfectly, they are of course premium category. Their prices are very high, especially lollipops and scented gum category. So therefore, their overall value is high. That is because of the value of the category is high. And there are some small players like Candyman and Sears and all that also having a reasonable share. However, in few categories, we are still dominating in the sense the leading in the market. Like hard-boiled candy, we are over 54% market share, and basic gums and jujubes, we are doing these three categories. We are having a higher market share than the competition. Thank you. Over to Sanjeev.
Thank you, Anuruddha. Good evening to everyone. Let me provide you with an overview of our export business for the second quarter. In terms of volume, during this period, we exported close to 1 million kilos of tea, which represents a 6% growth compared to the same quarter last year. This increase was largely driven by strong activity in our key markets, especially the Middle East, United States and Europe. These regions have seen a notable uptick in the demand for value-added products such as tea bags, tin caddies and tea souvenir gift items. On the other hand, our Far East market with a primary focus on China, maintained a steady demand trend similar to the same period of last year. Looking ahead to the next quarter, we anticipate this demand pattern to continue in these key markets. In terms of revenue, for the second quarter, we generated a revenue of 2 billion, reflecting a healthy growth of 23% compared to the second quarter of previous year. This growth is particularly noteworthy given the appreciation of the rupee during this period, which did impact the potential for greater revenue, but did not undermine our strong performance for the quarter. However, given the current appreciation of the rupee at these levels, we foresee an impact for the third quarter. In summary, both our volume and revenue have seen a growth year on year. Thank you. Let me pass this on to Hiran to take the further in the agri sector.
Thank you, Sanjeeva, and good evening, ladies and gentlemen. Let me take you through the details of the agri sector. So I think agri sector this quarter has been challenging. What you see is the group results combined of both the palm oil business and the dairy business. I will address some of the business specific issues in the next slide. But in the group level, I just want to highlight that we had an impairment, non-cash impairment charge of 253 million, which is coming from the dairy business, the biological assets in the dairy business. And also, if you take year on year, if you analyze the financials, there's a tax increase of about 300 million. So that is also coming from the change in tax rate. Agri farming tax rate went from 0% to 30%, and agri processing tax rate went from 14% to 30%. So those rate changes have increased the tax burden of the company. So hence you see a PAT number which is lower than last year. Moving on to the sectors covering the palm oil, you see volume-wise we have done better. We have produced 12 million kilos compared to about 11 million kilos last year, about a 14% increase. Price has been marginally down. Currently, we are selling at about 416 average in the quarter compared to about 438 per kilo in the same quarter last year. If you are tracking the global markets, you would have seen a slight increase. As you might be aware, we are on 3-month forward contract. So it takes some time for that price increase to adjust in our pricing. So I think going forward, we can see a small uptick in the pricing per se. Moving on to the dairy side, I think revenue was down 16% year on year. This is predominantly stemming from the price decrease. Our prices per liter compared to same quarter last year down about 30 rupees, currently standing around 230 rupees a liter. Volumes have also been lower. We did 1.2 million liters in the quarter compared to 1.5 million liters in the same quarter last year. On a positive side, we've been able to reduce the feed cost, which has slightly helped with the margin, and we see that happening in the next few quarters as well when the input cost comes down. And also for the milk volume, this specific quarter has been specifically lower in terms of milking cows. I think when the new cows come into the system, we can see that will increase in the quarters ahead. So that's it from the dairy side. Moving on to Q&A.
Yeah, thank you, team, for the detailed insights about the group as well as each of the sub-business segments. So with that, like Hiran said, we can move into the Q&A session. So as I mentioned earlier at the start of this webinar, you can use the raise hand option to ask your question, and I'll unmute participants accordingly. Or if not, you can type in your questions in the chat box itself. See the presentation. We have a few questions. Sajid, so he is asking what's the average margin of pharmaceutical business?
I'll take that. Ajit, due to competitor reasons, we don't disclose specific BU margins. What we disclose is the sector margins. So, sorry, we are unable to disclose that. Hope you understand.
Then one question from Disha. Why has the Lipton Ceylon market share has come down so sharply? Rudra, you'll be able to get some.
Yes. So this is mainly coming from their reach, number of outlets. So they are focusing on weighted distribution. However, their overall coverage has dropped to about 38 to 40,000 outlets in the country from about Unilever days close to 100,000 outlets.
Thank you. Hope that answers your question, Disha. So Tarushi has asked, was there any increase in the unregulated pharma prices during the quarter? Any insight into mix and change in consumer sentiment which resulted the increase? Which Shanta, you were able to answer that.
Yes, Hasan. No, actually, there were no price increases during the quarter that took place. In terms of our portfolio, what has contributed to a better mix is that we have been doing extremely well in our dermacosmetics, which is Cetaphil. So Cetaphil, new products have come into the market. We have launched the entire kids range and sunscreens, and it's a high-end product, and it has now got penetrated into some all the pharmacies and have gone to some of the key cosmetic sort of GT as well, cosmetic outlets. So that has been a success for us, and also in our dermatology business also have fairly picked up. I think mainly the margin mix was supported by these two segments and products which came through, new products which came through during the quarter.
Thanks, Jonathan. So moving on to the other questions, Ruchir, he's asking, can you elaborate on the impairment charge in the dairy business? Aruna, be able to get some detail.
Yeah, thank you for the question, Ruchir. And this is to align with the IFRS impairment testing that we have done for the biological asset. So accordingly, this is in the model 2 valuation where we have some parameters set for the valuation. Based on these parameters, we did the valuation, and then we have recognized in the income statement 153 million valuation.
Maybe just a follow-up question to that as well from Kuhan. We expect the tax impact on the agribusiness to continue in the upcoming quarters, or is it a full adjusted for the increase in tax rate?
Yeah, this is the standard tax rate as per the tax law, and agribusiness or agro-farming ended their tax holidays of zero rated tax by 31st March. And going forward, this is the standard tax rate of 30%.
Thank you. One question from Chiranthaka on farm manufacturing. What is the current capacity at the MDI manufacturing facility? What was the capacity added during the last quarter?
Sure. So what we have is we have right now, we've recalibrated to a stated capacity of 4 million units for the year. What has been a learning curve across the last 24 months has been we've been scaling up our batch production in the MDI and also realigning. So equipment per se is the same. We have added more sort of in lines in terms of packing, in other sort of spaces that have allowed greater final output. New equipment per se is due in the later part of Q3, where our capacities will increase in Q4.
Thank you, Shan. One question from Pugal. What is the recent update on the development of new chocolate products under the confectionery segment?
Yes. So we have done some formulation improvements and price revisions and launched that in Q1. And we are also already moved into a new wrapper with 3 slabs in Q3 as well.
Thank you. One question from Isuri. The global palm oil prices increases cause the local palm oil prices demand to take a hit. Would there be a demand hit for sun palm production?
Let me take that. I think there is a slight disconnect between global prices and local prices. I think local prices are more impacted by the prices of coconut oil. I think there's a mismatch in the duty schemes between palm oil and coconut oil, and hence coconut oil is slightly cheaper, and the demand is adjusted because of that reason. But that being said, again, as a country, Sri Lanka is a net importer of palm oil. So whatever we produce will be sold because we just locally produce 8% of the national requirement, and whatever the plantation produces, half of it. So in that sense, there's bottomless demand. Pricing might be a challenge.
Thank you. The next question I'll give to Shanta. Shanta, would you be able to give some insights into the healthcare margins reported for this quarter, which being historically highest? What the reason behind this margin?
In terms of healthcare sector, Hasanta?
Yes, sector. Yes.
So sector actually is mainly driven by the agency business and the medical devices business, which is pharma agency business and the medical devices business, and also the growth in the manufacturing business, and also the revenue increases that I presented earlier has supported the overall mix. That is what we see. And agency business, I just explained how we in pharma, how we got the margin improved from the mixes by our derma cosmetics, and also medical devices hitting their numbers. Although compared to the previous year, they had a dip. Overall, they have been stable in the last 2 quarters. Hence, the margins have improved.
Thank you, Shanta. One question on the tea business side. Anuruddha, maybe you can answer that. How long will it take the higher tea auction prices to reflect in EBIT? Are there any immediate planned price increments to pass on the costs?
Yes. So the higher tea prices are already reflecting in the EBIT as it is. And we have taken a slight price increase not to cover the entire cost. We have taken a slight increase in April, and that is already in the system.
Dinakar, I think we answered the question on palm oil prices, so I'll move on to the next question. Sarushi has asked, can we have a clarification into the bad debts amount, which is 350 million in cash flow? I don't know, actually. Yeah.
Let me get back to you, Sarushi.
There's one question from Murali. Any update on the ban on planting or replanting of palm? When is the next replanting due?
Sure, let me take that. So as of now, we have not heard positively from the new government per se on change in policy. So the policy still continues. All planting is banned, including replanting. So we haven't heard anything positive yet. With the lifting, the potential lifting of the ban, it will still take a good 2 years plus with the importation of seeds, setting up nurseries, etc., to begin the planting process. So impact is quite a way off in terms of where we are. So we're still waiting to see once the elections are over and the new government comes into place, whether they will make any legislative moves in this direction.
Thank you, Shyam. I think,
With regard to the bad debt provision, this is a standard provision based on the ECLO, expected credit loss basis, that we have accounted for the quarter or the first half, 30th September, mainly long outstanding dues such as government debts that we have to make a provision.
thank you. I think, Dinakar, your question was also answered previously. And Masaka. Go ahead, Asanka, you can ask your question.
Thank you. Thanks, Shyam, for the time for the call and a good set of results.
Asanka, sorry, we can't hear you properly.
As to how the margins might move in the healthcare segment if the demand in the pharmaceutical distribution side increase. Can we expect a margin improvement if the volumes come through?
Your question, Shankar. Shanta, you heard the question?
I have the question, Shyam. Let me answer. Asanka, actually, the pharmaceutical distribution business is not a very high margin business for us. However, as you correctly mentioned, volumes are the expectation. In terms of margin improvement, we are working on the model that we have built on. What we are offering is a sales and distribution model. It is not only last mile physical distribution. We have added further services, and we have a full-fledged sales team who would book orders. With that, we see with our new clients coming in, we are expecting a relative margin improvement in that business because of our offer we have improved. So now we are offering sales and distribution both together, and we see it's very positive for some of the customers because we are the only player in this segment who can cover the entire island and all the channels in where pharmaceuticals can be stored, or retail, modern trade, the hospitals, and the retail pharmacies that you see on roads. So it will in the future be better. However, even so, relatively the margins are lower.
If I can go, thanks, Shanta. If I can go ahead with couple more questions. Maybe I saw it wrong, but when I saw the confectionery slide, it looked as if the confectionery, in terms of volumes, has been reporting degrowth for a while. What is actually driving that degrowth in terms of volumes?
The confectionery volumes are taken on the last 2 quarters.
Yes, the good.
Why?
Yeah, so one thing that some of the SKUs we have delisted mainly due to the margin pressure, and also distribution, we have an issue in terms of reaching the total potential outlets. Yeah, numeric and weighted distribution has dropped, and also we did a internal static change where we merge both tea and confectionery dedicated operation to one operation, one SEL portfolio. So during that period also we had some setbacks in missing some outlets in the whole activity area.
So does that mean that we can expect the volumes to gradually improve
So overall, if you
from this
take
point
overall,
onwards?
yes. So overall, confectionery industry is growing, which is a good sign for us. It's a 36% growth. We have put plans in place, and also we have done some innovations, renovations, and all that. So with this, all the changes put in place, we are expecting a growth quarter on quarter.
Thank you very much. That's all from me.
Thanks, Anand. Thanks, Asandra. A question from Naveen. When does your RSPO certification expires?
Sure. Yeah, let me answer that. So RSPO is an annual certification with annual audits. So it is a continuous process. We have a whole sustainability team set up to ensure we are compliant with all RSPO expectation. RSPO is the response roundtable on sustainable palm oil certification. We're the only palm oil plantation in South Asia with such a certification. Annual process, annual audits, and it continues.
Thank you. Question from Harushi. We see that the consumer business margin is improving quarter on quarter. Is this supported by better capacity utilization in the export business, or do you see a relative recovery in the confectionery business?
Sure.
Sanjeev, you can answer the export business side of the tea business.
So in terms of revenue in the export business, we have seen a growth in this year's first quarter and second quarter. Depending on the exchange and the appreciation of the rupee, the revenue will be impacted if it further appreciates. But if not, in terms of volume, there is growth, and as a result, we could see a growth in revenue as well.
Thanks, Sanjeev. Question from Chirantaka. How much of the IFC's equity infusion would be allocated to the MDI expansion?
So 1/3 of the IFC equity infusion will be allocated to Lina manufacturing. MDI expansion is a large part of it, but there are other investments within manufacturing also which will be funded by that infusion.
Thank you. With that, if there's no further questions, we'll wrap up this session for today. So on behalf of Sunshine Holdings PLC, I would like to thank each and everyone who joined this quarter's webinar, and I hope to see you all in our next quarter's results webinar as well. Thank you. Have a nice day.
Thank you.
Thank you.
Thank you.